What's going on, everybody? Welcome back to the channel. Today we're looking at ticker symbol EOLS. That is Evolus Inc. We're going to see what institutions and hedge funds are doing in terms of buying or selling. We're also going to be looking at our stock price projection calculator to see if the stock should be worth about $10.50. And we're going to be doing some advanced charting to see if we can find any support and or resistance. It looks like I have charted this one out before. Ooh. Uh, yeah, we'll come back to this. Looks like this candlestick has fallen out of our channel. So, we'll come back and see what this stock has to offer. But for now, let's jump on in. So, stock has been trading around 2018 to 2025. RSI looks like it is in control of the bears, or bears are in control of the RSI. Momentum is heading down, and that does make sense. You guys can't see it, so let me move my head. We can see right here this downtrend. The stock went from about $17 to now $10.50 in a matter of 3 months. So kind of crazy. Money flow looks like it is kind of flat or going down. We'll see what big money's doing. Our relative momentum indicator is heading downward at the moment. Things change though pretty quick. So, quick highlights. Let's see what we got. The sales here, 2023, they did 202 million. The trailing 12 months, 248 million. That is fantastic. They are not profitable, barely. Shares outstanding are going up. So 2024, there's 63. Well, we're in 2025 now. However, this data does reflect 2024. So 63 million shares are in the pool now. That could be because insiders are selling. Institutions and hedge fund shares that were locked up are selling as well, adding to the pool. And our EPS looks like it was getting worse here, got really good, got a little bit worse, got a little bit better. Let's just go ahead and just see 2024 annual. It's getting better. It's getting even better. So the EPS on a year-over-year basis is reversing, which is fantastic. So EPS reversal here long term, that's great. Sales continue to go up. That is fantastic. Their profitability, let's just go down and see what's going on here on a quarterly basis. This could be a one-off, so let's just check. It is not a one-off. So, let's see, Q4 2022, negative 13 mil. Q4 2023, negative 11 mil. So they improved by almost 2 million. Q1 2023, 14.79 negative. Q1 2024, negative 13.11. So that's a positive increase. Q2, negative 18 million of 2023. Q2 2024, negative 11 million. That's really good. However, this is where it kind of gets a little unfortunate. Q3 2024, negative 19 million compared to Q3 2023 of negative 16.9 million. So a little bit of a bad move there in terms of trying to keep that net income going the right direction. I think that's exactly why we're seeing the action we are from the stock, where the stock is going down due to their income kind of getting off track of becoming profitable. So that's just quick, just at a quick glance. So going back here, quick ratios over 1. That means if they were to close their doors tomorrow, they would be able to pay off any debts, loans, notes, IOUs, etc. Big, what's going on here? That's some big red numbers. We'll check that out. EPS over the past 5 years, positive 10%. However, looks a little interesting there. In sales, positive 55.8%. That just shows that they are resilient. They did last through the COVID era. Gross margin, 67%. That's beautiful. Anything over 30 anything over 24 is really good. When you get over 15 to 20, that's probably like a high value stock or just a good quality value stock that probably offers a dividend and they just grow consistently over year. Not too many shorts. Good average volume. So let's plug her in. Let's see what we got in terms of a potential stock price. Income is, we're not going to include the market cap because we only add the market cap if it is over $1 billion. In this case, we are only at 665 million. Income is negative 55,460,000. Sales is 248,330,000. All right. Onward. Let's get this out of the way. Gross margins have been actually really good in 2024, so good for them. They've kind of found a secret sauce, but that income, that profitability is kind of just lurking. Okay. Cash, $85 million. Okay. 85,030,000. Okay. Debt, 128,270,000. All right. And let's just see, total assets 229 million, total liabilities 223 million. Ooch. They are just inching closer and closer to Q4 2023. Liabilities dwarfed assets. Not good, not good, not good, good. Assets are better than liabilities here, but weird little pattern we're seeing here. So we definitely want to see the assets separate and get further from their liabilities. If they face a hard year where something happens and their revenues go down, interest on their debt goes up, unforeseen circumstances, supply chain issues, what you name it, you name it. This is a little bit of a dangerous territory in my opinion. Okay. David M. Making a killing. Good for him. Good for him. So I'm of the ideal that if the stock is overvalued, we'll see a lot of people selling. If the stock is undervalued, we'll see a lot of people buying. In terms of insiders, because insiders kind of give us the best gauge. They know what's going on behind the doors. So when I see this, it's not really a red flag. It's just something I'm like, it doesn't appear that the stock is undervalued at the moment. So back to this. All right, our shares outstanding is 63,250,000. This is a $2 stock. If I had the market cap, it brings it up to like 8. Let's see, 665 million. All right, I figured out what the issue was. This is my public. You can see projected stock price calculator. Somebody was messing with it, so I'm gonna go ahead and cut that off to the public. Unfortunately, so if you do have access to that, just go ahead and do this manual on a calculator. If you want to do this, add the market cap, income, sales. You get your total, add the debt, add the cash, remove the debt. That gives you a new total divided by shares outstanding. Project stock price. So we're no longer using that. We're going to use the one that I built a while ago because it is accurate. So again, we're at a $2.30 stock price, but if we add the market cap, which I think this brings us back to $8. No, that's right. 665,510,000. Yeah. So this is a $12 stock if we're including the market cap. However, I typically do not like to if it's under 1 billion. So I'm getting a very, very low stock price here. So that is that. We don't have a PE or forward PE here. I don't know if that's because it's uncalculable or what. Finviz has this at a high recommendation. I'm a little bit cautious right now because if their net income is continuing to go in the wrong direction, this thing could get bloody quick. So let's just check what institutions and hedge funds are doing. It says they own 78.9%. New data shows that they actually own 87%. So that is good news. We can see, it looks like our latest, let's just open it up. Our latest bar here is actually less than November 2024. So potential downtrend could be starting, or it could just be a plateau where it just kind of stays flat and then big money jumps back in. Let's go ahead and look at the charts because I don't remember when I charted this, but look how beautiful this candle is respecting these lines. So fantastic. Looking at a potential Elliott wave move here that did not work out. I'm guessing some earnings in this area were not as good. The company tried to bounce back, failed. Optimism, and now it's like, oh crap, their net income is going the wrong way. So we want to be closely watching this for a potential touch at $6.69. That would be a wonderful area to possibly get in. And I say that because the trend is your friend until the end. This could be an amazing stock. Institutions could be buying. But if there are people in the background, dark pools, whoever, are shorting this to death or manipulating it, it's going to follow the trend. And the trend is pointing down at the moment. That's just at the moment. Again, this is not a bad company at all. It looks like the candles are really respecting this. So this one too. Let me just show you what I mean. Okay, we have our candle right here, perfectly touching resistance there, falling through, beautiful resistance here. This candle just almost tests it to a T. The next candle, great support here. We have our move following through. This candle breaks upward. This one just perfectly on the channel, on the line, on our Fibonacci arc. Perfect candle, just basically grazes our Fibonacci arc right here. So again, watch the 690, the 660 level and the potentially 530 level. That is, again, where we might see some beautiful accumulation, a beautiful area to accumulate. So on the sidelines for this one, however, it is a company that is growing year over year on the revenues. Institutions and hedge funds do like this. As of today, their EPS is reversing on the bigger picture, I believe, if I recall. 108. Let's just see. Where are you? Where are you? Where's the EPS? Oh, I'm on the wrong thing. Okay, EPS. Yep, it's reversing on the bigger picture as well. So again, we need to see net income go the right way. EPS continue to trend to the upside. We're going to want to see EPS. This is on an annual basis. Again, we're going to just want to see it do better than the year over year EPS. And then their assets and liabilities need a little bit more breathing room. They're a little bit too close. Once liabilities exceed assets, we could see a short report come out from somebody saying this company is in danger. However, if we look at their quick ratio, it's over 1. So they're not in danger, but it just gets into a little bit of a gray area. So we want to avoid that at all costs. If you made it this far, thank you so much. I like you. Have a great day. Talk to you later.